Problem 3.4a, Part 2, asks us to start with the adjusted trial balance. And just to remind you, those are these numbers over here. These are the numbers that represent the most recent and the most accurate balances in the accounts. They were the ones that we came up with after we adjusted the year-end totals. You'll notice I have one highlighted in yellow. I skipped that by mistake when I did part 1. So, giving us this piece, it says, okay, you've got all that. Prepare the financials. As you know, financial statements are prepared from the adjusted trial balance. So, we need to start with the income statement. And this is really an exercise in cut and paste, because we're going to go look for the revenues, look for the expenses, and copy them over. So we have consulting fees earned, $134,240. $134,240. Then we're going to go down the expense column. There are no other revenues. If there were other revenues, you would add those. There are none. Then we just have some expenses. And I like to go through the expenses in order, simply because I'm an accountant, therefore anal. I have $6,000 in depreciation expense. I have salary expense, $74,000. I have interest expense, $2,200 over here. 7. I should be checking them off over there, really. $2,200. Insurance expense, $55.80. That was that adjusting entry. Rent expense, come back, get the same number, $14,500. Not the same number, same place, different number. Supply expense, $14,000. And advertising expense, $13,000. I add up my total expenses, including depreciation expense. Remember, that's going to become important when we do cash flows, because of all these expenses, that's the only one that didn't involve cash. That's going to become important. So our total expenses are $129,280. So our net income is $134 minus the $129. Give you a different number, a different color. $4,960. Next, it asks us to do the statement of owner's equity. Well, we can do that. That's no big deal. Well, the only number we now need from this is here, because remember, revenue minus expense is net income, and that goes through our funnel to retained earnings. So let's let this go through to our funnel and retained earnings. We have $49.60 net income. Now we have to start with our beginning retained earnings, which they give us as $25,000. That gives us a subtotal of $29,960. We paid $5,000 in dividends. So 24,960 is our ending retained earnings. Now, for those of you who like shortcuts, you can take a look at income and dividends, compare them. Our income was $49.60, our dividends were $5,000, our retained earnings had to go down by $40. It's a quick way to check. You have to do it this way for the financials, but it's a good way to check yourself. Now, this number flows through to the balance sheet. And remember, in my class, BS stands for balance sheet. So, here's our balance sheet. Let's grab our equity section first, since we're already there. Let me get my notes so I'm not saying stuff too stupid, or too much more stupid than average. They give us our common stock number of 15,000. Our retained earnings we just found to be 24,960. So our total equity is these two combined, 39,960. Now we're going to go back to this, and we're going to pick up the balance sheet. Asset, 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 contra asset, liability, 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 equity, equity, equity. We're going to go back and we're going to copy down those numbers. So my assets for cash, 34,000. My asset accounts receivable, 22,000. You see where I'm getting these numbers? No, you can't because they're not quite on the screen. 34,000, 22,000. Office supplies, 2,000. Prepaid insurance, 29,60. Office equipment. Remember, equipment is shown less accumulated depreciation. So we have 84,000 minus 20. So we have 84,000 minus the 20,000. So the office equipment is 64,000 because equipment is shown net of accumulated depreciation. So when we add up those total assets, we come up with 124,960. Now, you can't do it this way, but I want to show you something. If we subtract this 39,960 from 124,960, that will have to give us our total liabilities. And that's a way that we can check ourselves. So let's take our liabilities, going right down the list. Accounts payable, 10,000. Interest payable, 1,000. 10,000, 1,000. Salaries payable, 7,000. Unearned fees, 15,000. Long-term note payable, 52,000. You add those together, you come up with 85,000. And 85,000 and 39,960 is indeed 124,960. So, we just went through the entire accounting cycle. We went from the adjusted trial balance to the income statement to the statement of owner's equity to the balance sheet. And remember, order is important. You have to go income statement, statement of owner's equity, balance sheet. Ready, aim, fire is not the same as ready, fire, aim. Order is important.